Good morning, everybody. Welcome to Friday and the last flow show of the week. I hope you're doing well. Good morning to Kate. Good morning to Stel.
Morning. Happy Friday.
Good morning, everybody.
Friday. You all right, boys?
Yeah, good. Remember Sunday, we have the World Cup. Yay.
Yep. Zero work for the next month.
I still remember when I was working in the city when the World Cup was on, or when Wimbledon was on for that matter, there was like very little work being done.
Yeah, big liquidity drop going to happen
Yeah.
when the games are on. So be prepared for that starting next week. There's 3 games a day, all in working hours.
Yep.
So, going to be very quiet. We have to do a flow show on the World Cup updates. They have to do team news and stuff. Right, let's get stuck into it. Not a whole lot going on this morning, it has to be said. Market having a little bit of a pause, a little bit of a refresher, but there are things going on in China. Beijing City have said that new local COVID cases are rapidly growing and the coming weekend is important to curb those cases. It's going to be asking residents to avoid gathering this weekend. That in itself is maybe a sign of how they're looking to ease restrictions, because they are asking residents to avoid gathering this weekend rather than saying you will not gather this weekend and we're shutting down all public gatherings and stuff. That may still be the case, but it has a slightly more polite tone on it than it would have done previous months. The reported cases were 232 for Beijing, so that gives you some idea. Just 232 new cases, and they're still asking for restrictions.
That's amazing. That
Amazing.
really is.
Yeah. And
I guess if you have a zero tolerance policy, then you have to stop it until it gets to 0, right? But that's like impossible. But anyway.
Yeah. Anyway, and you compare that to Japan, who upped their COVID level yesterday and having over 100,000 cases. New cases coming in, so yeah, just shows you the stark difference there. And speaking of Japan, more waffle from the masters of the BOJ. Uchida was out saying that inflation could get stronger depending on corporate behavior. As has been mentioned many times in the last couple of weeks, the new fiscal year coming up will be a big point for inflation, particularly from wages. As things get organised for the new year, wage structures from firms. So that's going to be something to keep an eye on, and Uchida there is highlighting that. Kuroda's yet to see inflation hit 2% in a stable, sustained manner, and possible CPI accelerates more. Now, this came as CPI took a big leg up yesterday in the data. CPI headline jumping to 3.7% from 3% prior. The core up to 3.6% from 3% prior. Big, huge jump in inflation. And the problem that I continue to maintain is that their stable inflation is on the clock. Inflation has been rising for a while now. It's becoming a trend, or it is a trend. It's going higher. How long are they going to call the piece of string in terms of what they deem stable? Kuroda still thinks inflation is going to be down next year, but it is on the clock, and the higher this goes, the more pressure is going to come in on the Bank of Japan to do something about it. I think what we may have to watch for is the possibility of some greater comments coming out from the government, because they'll be watching this with just as much interest as well. What did you make of that reading last night, Kay?
Yeah, it's indeed going higher, and then Kuroda came out and tried to smash it down again. He did say something really interesting though in his comments. He's saying that he really puts a condition of for inflation to sustainably hit 2% on the wages, and he says it's going to take 3% rise in wages to put inflation stably at 2%. So, but we know that those negotiations will be going on until the end of the fiscal year, and we will only know around March if they are going to get that 3%. The lobbies are pushing for more, so they might get it. But it was interesting that he's really trying very hard to push everything out until the end of the fiscal year. So
yeah.
that is clear. But yeah, and when you say the government's talking about the inflation, don't forget that they put stimulus package after stimulus package in place. And if they would go and tell Kuroda, well, you know, inflation is going higher, perhaps you should do something, then they will shoot themselves in the foot. And I'm not sure we are going to hear a lot about from the government about the inflation.
Have they got any feet left to shoot off, those guys in Japan? I mean, Kuroda seems to be shooting himself in the foot at the moment by sticking to his easing policy as inflation, as you can see there, is rocketing pretty hard. But yeah, the pressure's going to mount from one way or another, be it the market pushing or be it other forces pushing firms and the like. But we're all watching the data, so we'll see how this continues into the new year. Whether there is any form of pullback coming there that will at least give the impression that Kuroda's on the right track. While we're at that part of the water, or that part of the earth, little fat boy, our mate over in North Korea, is firing more rockets off, ballistic missiles into Japan's economic zone. That's getting a bit of a stronger response now. And Japan, South Korea and the US are all going to be having a meeting about it. The US and South Korea are apparently conducting drills against North Korea. That was reported by Yonhap. Not sure what that involves, but they're showing a bit of might around there. Probably that's what's teasing little fat boy, as we call him, to play with his toys. But he's been doing that for quite regularly now, so it's something we need to keep an eye on just in case something lands where it shouldn't. Staying over there, and the RBNZ, there was a Reuters poll out yesterday or last night, and 15 of 23 economists see the RBNZ raising by 75 pips at their NOV 23rd meeting. That's next week. That will take the rate to 4.25%. The remainder 8 said they're going to hike by 50 basis points. The majority of them think that they'll hike the key rate to 4.75% by the end of March. Just looking at the probabilities this morning, a 50 pip hike is priced at a 55% chance. 75 pip hike is at a 45% chance. So a bit the other way compared to those economists there. So much for the only 2 more rate hikes. Okay, we're now talking back at the 75.
Yeah, perhaps Mr. Orr will have to revise his stance. There is a good case, of course, for the 75 BPs. Yeah. It's really between 50 and 75. I think the chances are high that they do 75, but then perhaps get a dovish 75 if you can beat dovish on a 75 BPs hike. But you know what I mean. It could be that they do 75 and then Orr goes like, okay, now we really want to see the effect of all those rate hikes. In that sense, being a bit more dovish, instead of saying or revising his earlier comments, said that they would stop the end of the year. I don't know really. It's 50 and continue, or 75 and perhaps go a bit harder on the pause. I don't know. At least for the time being, the Kiwi seems to respond positively to all these expectations. We've seen not only Kiwi dollar performing well, but it's also performing well versus its cousin Australian dollar. Aussie Kiwi is on a gentle slide lower. Actually, in an attempt to break pretty serious levels right here around 108, 70, 80, and then 108.5. It's they're pretty decent levels.
Yeah, cheers, mate. That's going to be something to look forward to.
I'll show the Aussie Kiwi later.
Yeah, you've got better text on it than I have at the moment. Right, coming a bit closer to home, S&B's Makler said that inflation is more persistent and broader than expected, and that inflation is no longer shock driven. That's something that they're recognizing there, something that compared to the Bank of Japan, they're not recognizing that there as much. They still think, as we say in Japan, that it's all shock-driven inflation, energy pricing, that sort of thing. But the S&B saying that it is no longer shock-driven, and they're going to continue to raise hikes if we see inflation projections above target. So again, setting up for this hike at their December meeting, their quarterly monetary policy meeting, which will be in December. Over to the US, and old Bully Bullard was out on the wires and talking pretty hawkish. Quite a few comments to that effect. Rate hikes to date have only had a limited impact on observed inflation. Even the dovish assumptions about the state of monetary policy warrant further hikes. Policy not yet in a range estimated to be sufficiently restrictive to reduce CPI. Then he went on to talk about the potential rate ceiling. And he said the monetary rule would set the lower bound on restrictive policy of around 5%, a lower bound, versus the current Fed target range of 3.75 to 4%. He sees 5 to 5.25 as the minimum level he's aiming for with rates. So I think we can guess that we know where his dot's going to go at the December meeting, well above 5% by the looks of things. He's another one that said that the Ox CPI report was encouraging, but only one data point. And the Fed will want to err on the side of keeping rates higher for longer to avoid the mistakes of the 1970s. So pretty strong comments from Bullard there. Not surprising, really. He's a big hawk. He can change his mind like the weather, though. So we have to take that into consideration. It's all going to depend on how many more are like him in terms of hawkish and where they're going to start sticking their dots for this ceiling. Fedmester was also out with a few comments on the bond market, saying that short-term funding markets continue to have vulnerabilities, and that the low liquidity in Treasury market reflects an uncertain economic outlook. This was something that one of our viewers raised yesterday, and that we also spoke about possible liquidity problems in the Treasury market. Obviously, a lot going on with QT and everything like that, and also the move out of bonds that we've seen coming with higher rates naturally. They are keeping an eye on it, as mentioned yesterday. They do have tools in place to address any issues on the bond market. We don't think at this stage that it's anything to really worry about, but it's a situation we'll keep monitoring. And Kashkari was out as well, saying how high rates need to go is an open question. There's still a lot of tightening in the pipeline, and he's not going to be overly persuaded by 1 month's data. And this is something that a question that I asked yesterday, because a lot of these Fed heads are going on about how this is, one data point, or not going to be persuaded by 1 month's worth of data. This is 4 months of falling inflation now, particularly in the headline. Though, as Kay pointed out yesterday, it's the first drop in 3 months for the core. And we know central banks like to do the headline core switcheroony with regards to what's important. In the early stages, it's the headline, and then later on, it becomes the core, as befits whatever narrative they're pushing at the time. But in that essence, as I say, that's now 4 months on the trot with lower headline inflation, but it is only 1 out of 3 of lower core numbers. So the core is something that we will continue to need to monitor to see if it's going to continue to follow the trend in the headline number. the core does tend to lag. And as we were seeing those headline numbers coming down, but the core rising, that is something that I was mentioning. We have to look at the lag there to see which one's going to move first. And it's possible that the core is going to start coming down, and we start to see this moderation in inflation. Over to Russia. There's lots of talk about meetings with the US and stuff coming up this weekend and in the days and weeks ahead. A lot of people have been tying it up with possible resolutions to the Ukraine situation, but a lot of it isn't. It's to do with these new start talks, which are to do with nuclear armaments and a new deal or new prerogatives about armaments and things like that. And that's what a lot of these meetings are about, although we don't know. There may be some meetings behind the scenes regarding the Ukraine. But anyway, the Russian foreign deputy minister, or deputy foreign minister, speaking on Korea, said Russia is committed to a diplomatic solution to the Korean Peninsula, but then also added Russia has nothing to talk to the US about Ukraine. So there we go. There's no, on the face of it, there's seemingly no talks going to happen between the US and Ukraine. And coming back to Europe, lots of press today about the TLTROs coming due for repayment or early repayment. A lot of the market talking about it, what this is going to mean for assets, for euros, for the euro, for yields, bonds, all sorts of things. And a lot may be made of this. Now, we have history here. This has happened before with the old LTROs, which were the first instrument that of this kind that the ECB developed way back during the GFC and the banking crisis. So I'm personally not expecting much to come of this. What happened back then was that banks came out and announced they were paying back so much amount, and it sort of became a bit of a PR event where, you know, banks made sure their headlines got out there that they were repaying money and that all was right in the world with them. And the question sort of became, okay, we're hearing from those who are paying back. What about those who aren't paying back? And I remember covering this way back when at Forex Live, and it didn't really develop into much in the end. What I think the issues that may come from this are what happens to all the collateral that comes back. For the banks to take this TLTRO money, a lot of them had to lodge collateral with the ECB. They will, obviously, as they pay stuff back, they will get that collateral back. So it's potentially what they do with that collateral that may cause things to happen in the market. If there's a big load of bonds, government bonds suddenly coming back and then being put in the market, obviously that's going to affect the price. Potentially, if they're selling those bonds, price goes down, yields go up. So that may be in effect, but I'm not expecting too much. The propeller heads and the economists will be digging into details and maybe making something of it. They'll be watching the periphery countries to see if there's any problems with paying back funds from there. But just for those of you who are in our chat room, I put a bit of a Twitter thread in about the TLTROs, how the banks are earning money, what it's costing them now. The ECB have changed the rules and put up the rates. It's not a big deal for the banks in terms of financing or losing money or anything like that. But we'll wait and see what the details are when we start hearing them. Kay, Stel, what are your thoughts on this TLTRO stuff?
I don't know if Stelios has something to say.
I don't know, mate. I really don't know. I was there when they started the LTROs back in 08, 09. I can't remember when it was. But
yeah. How much did you get?
How much did I get? Yeah, none. Have I told you the story where I was making dollars at the time, dollar rates, and I used to fill in for the euro guy, who was a very good friend of mine, and he was doing Aeonias and all the overnight index swaps and everything. And one day there's a phone call rings, and it's Alan Howard. He goes, what do you think is going to happen to Ionia's and FRA OIS spreads if they announce a 2-year LTRO? And obviously nobody had talked about the 2-year at all. And I'm like, okay, these guys know something. And 2 weeks later, they announced 2 years. Anyway, that's a different. It's an interesting story. No, I really don't have anything to add on TLTROs and LTROs and all that. I mean, it's yeah, I don't. Sorry. One thing I do wanna say is that you know, we had more Fed members talking, and you know, hawkish ones. Yes, we did get Brainerd, who was on the dovish side, but the Fed, you know, the Fed are telling us that they're going to keep going, and the market is you know, kind of calling their bluff and playing chicken with them, and so this is dangerous. You know, we have to. You know, the big picture is that I think this is dangerous. You know, there's a risk that they're going to keep going, and markets are really, really not going to like it. So just be aware of that, because the message they're giving us is consistently hawkish. Very few exceptions, but it is consistently hawkish. So yeah, if you're long risk, and I don't mean from one day to the next. Obviously, I'm talking about if this is like a macro view, or you know, you're playing a long-term swing trade or something. You have to understand that you are effectively fighting the Fed, and I don't think anybody has ever fought the Fed and won. So just you know, just have to be aware of that. You know, having said all that, if you go to the chat room yesterday, I said. When was it? Relatively early yesterday. I think the S&P was trading 39.15 to 39.20, and I said, look, you know, the feeling I get is that I think we're going to squeeze into the weekend. And you know, there's obviously two sides to the to each argument, and I said, you know, there's no fundamental reason for it. It just feels like that's the pain trade, or that's the you know, the path of least resistance for the very, very short term. And you know, look, we're already up 50 points or 55 points on the S&P, and I think this is probably going to continue into the weekend. But I mean, as a very short-term thing, obviously, you know, going further forward in terms of, you know, what's going to happen a week or a month from now, I think again, I think Powell is going to disappoint.
Yeah, and he was actually at a speech late last night as well, when he didn't utter any monetary policy remarks last night, which some might have been looking out for. But Kay, your thoughts on the acronyms, the ECB acronyms?
Yeah, I think we were like scratching our head a little bit about what it could mean, but really reading through a few pieces that people put together, it's rather gonna perhaps play on peripheral versus core. Europe, if we can say it, if you can call it that way, we did call it that way anyway for years and years. So yeah, what's going to happen in I think those spreads maybe are something that we are going to have to pay attention to. But fact is that the more they repay now, the more it seems that it could help the ECB in one way, but also mean that their QT, which they announced to start somewhere next year, may get a little bit of a head start just by all those repayments. So you talk about a little bit less liquidity, but we are talking about going from what is their balance sheet now? 8 and a bit trillion euros to from 8.8 to 8.3, or from 8.3 to 7.8, let's call it that way. And as such, for the euro itself, I don't know. For things that we trade, I don't know whether it's going to really have an effect or not. And then the other thing about what Stel was mentioning, yeah, just a good a reminder in regards to equity markets, is that we have OPEX today. The option expiries again. I never know which side we have to look at it, but it's like a popcorn moment again today on the OPEX side. So we could see a bit of volatility. people are saying again in regards to the put-call ratio that it may pull up equities, but I really don't want to speculate on it, and just let's see what goes on, and if there is any moves. If I recall well, last time we had a bit of volatility, but no directional move. Other OPEXs, we had a lot of moves. I really have no clue, to be honest, what's going to happen there. And I do agree on the don't fight the Fed argument still. Although, well, today in particular, I'm a bit short dollars, but versus stuff that's pretty big, like the Kiwi, and yesterday we also, and I'll show it in a bit, held a really good level on the cable after the Hunt budget, and cable is looking a bit perky this morning, so I'm owing just a little cable, call it a leftover of my options and stuff, but yeah, it looks as if it could push through just a little bit ahead of the weekend, and then see what happens when we wake up on Monday.
Yeah, definitely. Well, I, for one, am happy to fight the Fed at the moment. Have been doing so since the beginning of October, and I see no reason to stop doing that. I think they're getting very toppy in their expectations. I think this latest push from Powell and Bullard about the ceiling rising, I think they're pushing the envelope a bit too far. The data is showing signs of exactly what they're looking for. So I'm happy to be a dollar seller. Been at a bearish view for quite a while now, and I'm doing that mainly in Aussie dollar. So yes, I will fight the Fed until such time as they kick my ass, if ever they do. And on that note, you guys got any other headlines before we get really stuck into the charts?
Nope, apart from Elon Musk making a meal of Twitter. I mean, it's amazing the headlines you read about it, but obviously the guy is smart, but I don't know. It sounds like we need to find a new platform.
We've got one. It's called the ForexAnalytix platform, mate.
That is true.
That is true. It's all you need, and we don't lose our own keys for getting into it either. Okay, you got anything you need to add, mate? And the old headlines.
Apart from what you mentioned, it's been very quiet, and it should be quiet as well for the rest of the day. We've got a little bit of home sales, but then I'm not sure if that's going to be a mover at all. So there's nothing data-wise moving today. So in theory, we may see a bit of a rangy market, but then last times where we had no data at all, it went all crazy over the day. So I haven't seen anything else really. Yeah,
we've got Canada PPI. That's about it. So we only had the inflation the other day, so we'll see whether that has any say in anything. Right, so for me, I'm just doing a little bit of management of positions. Dollar China yesterday got up into the zone that I highlighted. I actually took some profit while we were on the show yesterday in the 716s. We have had a little bit of a move off those highs as we've seen dollar weakening broadly today. So we're heading a bit lower. I've shifted up my stops now, got them just below this 709 area, just to see what happens now. Are we going to have another little look down to the lows, or are we going to find a bit of a base and push on through this zone? It's pretty much been a case of some tech holding, some tech not, in terms of the shorter term levels. So pretty much got to the middle of that zone before we turned it around. Aussie dollar, that one, it broke through the support zone that I was watching here, that 60-70 zone. Didn't get too far, down around 25, 30 odd pips, and then it's turned right around and we're back above. So probably need just to reassess this area now. It's holding again as we've come back above, but we'll wait and see whether it's going to become a more decent resistance zone, or if it's going to wash out and we need to set our sights a little bit lower. From here, it does need to attack the 67, 40, 50 area and get above to keep this momentum going and maybe push on through 68. If we can't get through somewhere like this 67, 40, 50 area, again, it's going to suggest that this top is going to become fairly strong, and therefore we may see a steeper pullback. Then you'll be looking at maybe getting under this 66.30 area for a push down to the low 66s. So keep an eye on that. As I said before, you know, when you look at trying to pick tops and bottoms, this is the price action you're looking for. Decent amount of resistance, can't get up to the highs again. Then you start finding out where the levels are going to develop from here. And from there, you can learn to manage your trades. Dollar yen was another one. So we got up to this 140, 65, 70 zone and held it once again. You know, it's not a big zone in itself. It's only a few days old, but it just shows you we've come off these lows, came off that break below on the PPI, found a bit of support, but we get to a first bit of minor traffic and it can't do it. So the jury's out for me on dollar yen and when we push higher or indeed push lower, and we're sitting pretty much in the middle of that rough range at the moment. Just on this one, Kay, what are you making of it? Bit of indecision at the moment?
Yeah, yo-yo. For the time being, we've identified the lower zone, 138 down to 137.75. Now we are in the process of forming the upper side. Let me quickly look at what we have, because I didn't really have like a lot of big level. I had the 141 there. So that's yeah. We've got what is it? 2.5, 3 big figures to play inside for the time being, and then see what happens. We had a bit of a drop there on the CPI announcements, and then came back a bit on Kuroda, and that's it. Now we are. But the fact is, though, we have to know that we are below, psychologically below 140 right now. I don't know whether it's going to be important for the end of the week. I don't think the 140 as such is so important. But as you showed there, I think that's those are the ones that we are watching now. Get back through 141 figure 15 is probably going to run a bit. Get below 138.60, probably going to retest the 137s. And then in the meantime, as I said yesterday as well, I'm rather on the try to catch a knife downside, because I think fundamentals, okay, CPI is a bit higher, but as we've seen already, and I would like to repeat that here, it's not while CPI is going higher that the currency strengthens. We have the yen, we have to remember, was the strongest when they were in deflation, right? Yeah, CPI gave it a little bit of a notch because the market is looking at CPI right now, but then we are stabilizing here. I really right here, I don't want to get involved.
Yeah, I'm a bit the same. I was half tempted to hit a short up at that 140, 60 area. Just, you know, when sometimes you think, oh, I don't know if I can be bothered getting involved here. It is quite a tight range we're playing in, but dollar yen can do that quite often. But
well, in the last, compared to what we have seen the last months, this range is tight. On the other hand, you're still talking about 250, 300 points wide. So it is worth having a play now that we know the ranges sort of. It's worth having a play, and both ways. This is how we can trade ranges. Get back down to high 138s and it holds again. It's going to be a decent buy, in my opinion, and to retest 140, 140 and a half. And it's like trading like traffic lights. When it's green, when it goes up or down, you're good in the position, and then you get closer to the level, it gets orange and then red, and then you close down, and that's how you trade ranges. And even if you take only 50 or 30 or 60, 70 points in the range, it's still decent money, right?
Yeah, pips is pips.
whatever you do, yeah, there can be like relatively quick pips, but you also have to recognize when you're in the middle of a range and there is nothing to do, because whatever you're going to do is just to flip the coin. So
yeah, good advice. And I think, and I agree with you, I think that potentially the better trade is playing longs off the bottom of the range, because I still think there's a big risk from Powell coming out at some point, even if it's not until the next FOMC. But I think he's going to definitely reassert the Fed's push for rates and stuff. But despite a longer term bearish dollar view, I'm happy to trade the short term on the opposite side as well.
And where I would argue as well that we are maybe now in ranges is that we heard from Bullard, we heard from Waller, we heard from Brainerd. So we had the ultra hawks, we had the middle of the road, then we had Brainerd, perhaps a little bit on the more cautious side. I wouldn't say dovish, because he did say that they had to continue to raise rates, but perhaps a little bit more on the dovish side. And now, to be fair, yes, Powell will have an impact, but what else can he say than, yes, we will continue to raise rates? And I know it's going to be a disappointment to the market, and I completely agree with Stelios, actually, in the more medium term, is that the market is fighting the Fed right now, or calling the bluff or whatever. But if they continue on the same line, the market will have to readjust. So we are at like turning around the 4.5% on the 2 years. If the Fed make it really clear and adamant that they are going to go to 5.25, the market will have to adjust, because you're not going to continue to lend money at 4.5% in the 2 years when the Fed funds are going to 5%. Then you're guaranteed to take a 0.5% loss, right? So that's just mechanics. So yes, that will happen over the medium term, but in the short run, I'm starting to think that Powell might disappoint a few, and the dollar may stay on the strong side of things, but I can't see right now what he can say more than what we already heard. Of course,
I agree. I think it'd be a case of strongly reiterating what he said previously, and just not letting the market get too far ahead of itself. But
I'd argue as well that there is absolutely, if you look at the price of in the equity market, even prices of commodities and stuff like that, there is absolutely no way that they don't see anything right now to stop the train, right?
Yeah, exactly. And just for the record, if we do get a decent rally in dollar yen, that will be something I'll be looking to start building shorts into again. But we'll see what that brings and what levels we may get from that. A quick look at the quid pairs, because obviously we have the fallout now from the Hunt budget, or as it's being called, Shuntonomics, from some people on Twitter. There wasn't really much for the quid over all that in the end. So this move today is more on what's happening generally again in the dollar. So we're up back into the 119s after a little mooch to the 117, middle 117s yesterday. For me, it's still all over the shop. I'll maybe keep an eye on 120 for a scalp if we get up there on no news in particular. See if that level holds again. It's always a big number, even though it didn't stand up to much the other day. And as I mentioned on face, it's down into the 117s that the potential resistance, and we couldn't really get that far, putting up in the middle of that. So yeah, I think we may be looking for a bit of a range, 117s, 120s in this one. Now, euro sterling's looking a bit interesting, and I'm wondering if we're going to get a little bit of a break lower through this 87, 86, 90 area. Nothing more complex than just seeing these lower highs coming in. We're not getting back higher. I don't think we're going to collapse down to anywhere, 86, 85s, anything like that. I just think we might be just heading to form a little bit of a lower range here, maybe into this mid 86 area. That's been a bit of an on-off support and resistance area going back quite some time. So that's one area I'm going to look at. If we do get a decent move down to the lows, I'm going to be thinking seriously about maybe picking up some longs. I prefer it obviously down to the 84s, 83s, but I think that might be a bit of a stretch. It's been playing nicely between the sort of 87s and 88s at the moment, but sometimes ranges don't last forever, and they have a little bit of a blowout now and again. So we'll see what happens with that one. But if you've been playing the range 87s, 88s, just a bit of caution here. I think I'm just getting the old spider sense tingling a bit on that. Kay, do you want to have?
Just out. ECB says banks to repay 296 billion of the TLTRO funds. That's on the very, very low side.
Yeah,
I
mean, I think it's quite a wide quote, isn't it? Anywhere from 200 to 1.5 trillion.
I mean, yeah, but most people were expecting around 500, and that is really at the very, very low side of things.
And what's that been worth so far? About 5 pips.
Euro decides to ignore it.
Yeah. So there we go. Like the effect of the TLTROs. Back to looking at football fixtures.
Yeah, exactly.
Yeah, go ahead, mate.
All righty. So let's. It's going to be a quick one because I'm looking at the time, and it's Friday, and the markets are not really.
And the pub's open.
Sorry.
And the pub's open.
And the pub is open. Yeah, you're so right. I don't even know if I'm going to make it to the fixing today. And I want the weekend to be here. Silver, as we've seen again, we had this run on Wednesday up to the 22 figure 15. Bit of a disappointment there. The dollar made a little bit of a comeback, but we couldn't hold the. It tried, but it couldn't hold the 21.40, which is the. It's the 200. No, it's the. Why? Where's my 50 DMA gone? Should have been the 50 DMA.
It's turned into the 55.
No, I mean, it says the 200. Oh, it's 200. The 200. 200. Sorry, the 50 was another thing. So the 200 DMA here. Yeah, you're right. Wasn't it the 50 DMA that was around here, Stelios?
Let me check.
Oh no, I know the 50 DMA is on the yields. It's okay. So we're back below.
It was the 200 DMA, which was at around, which is at around 21.45.
Exactly. So we went below. Bit of a disappointment sell-off back into the 20s. We did not reach the other level in the low 20s. I'm a bit unsure here. I'm not changing anything to my long-term positions, but as with Stelios, I'm a bit cautious around here. We are going to need a close above 21.25, 21.45 to start going again, perhaps next week or so. But then when I look at the yields above here, the 2-year close to 450, the 10s back at 380, is it really telling us to buy this stuff? I don't know. I really don't know right now. I'm gonna go with the just the price action and see if the dollar yields are a little bit lower, or the price action on silver. If we break above 21.45 again and start to push higher, I may try to accompany it for back up to 22. But otherwise, this week is done over and dusted, and I'm not going to touch it anymore. US 10s, yeah. So we tried below that 370, which caused the drop in the dollar yen the other day as well. But we are gradually making our way back here. Even weaker data in the US failed to put too much pressure on it. We had a little bit of a look lower yesterday, and then now we're back at 380. So The dollar is the yields are putting up a bit of a fight. The dollar has made a bit of a comeback, but then as I'm not going to show dollar yen again, Ryan showed it already here. I have like a mini trend line here, mini support coming in at 139.70. We went down below on the CPI, retested it right now, and it may be holding, but as said, I'm not going to do much inside the range. Euro dollar, idem ditto, range is tough right now. Bottom end around 102.90, 102.70, also called by a lot of people. I've got it around 102.58.60. Should be a bit of a support. This red line now, the big zone is completely getting watered down. I think we are watching at we're looking at what people were looking at above here as well, which is the 200 DMA, which is just above 104, and then a bit of a horizontal resistance above there, 104.75. I think we are in ranges there as well. One interesting one though was yesterday the cable. So we had the run up before. Even though most of it was leaked already, I don't really understand why, but the market must have been just short cable. And then as Hunt was talking and as the OBR came out, the market decided to that it was enough, and we had a bit of a sell-off in the sterling. There was a bit of a wedge here, but on stuff like the budget, it's that was a bit fragile around 117.85. But the bigger zone here, 117.40.60, held rock solid, and we started to gradually climb higher again today. We haven't looked back since the morning. We haven't really looked back. We're trading above this 118.75, which is a small support already respected earlier in the day. Could be enough for a little push back up to 119.90 if the PA warrants it, and the fact that we are holding above this 118.75 may suggest that cable could have a little look higher. Euro sterling is putting up a fight, as Ryan already showed. 86.90 figure, big zone. Again, 92 the low this morning, and we are back above. So for as long as it holds, it holds. Let's put it that way. If it breaks, which may be the case just ahead of a weekend, if some smart cookies or smart or less smart or bigger hands want to get some stops out of the way, perhaps ahead of the weekend, we could have a look below on the euro sterling. But I doubt, as Ryan said, that we are going to make it too much, make too big waves. If you look at this 86.5, 86.70 zone is already a bit of support again. I'm not sure if we can push much lower, but being Friday, get prepared for any move. Interesting one lately that's been building up short term since last week. We had a bit of a channel here on the sterling yen, and we've tagged just the upper end this morning. Quick run up. Looks to me that was a bit of fixing related into the 10 a.m. London time. And so now we have a couple of markers here: 167.30, 167.40, 167.60. There's a bit of resistance up there. If ever we'd make it back up there on the Friday evening, it may be enough. And on the downside, I'd look at support coming in below 166 right now. We've seen bit of this channel now forming here, and the support should be around 165.70, 166 the figure. On the rest of the pairs, yeah, I was going to show the Aussie Kiwi. Let me quickly remove this one. That was like a short-term wishy-washy zone that we were trading inside. You look at this. This one, when it broke down and up, always caused some accelerations. This is now lying around 108.50, but we have a double support here that has been respected up to now. When we see this is a daily, right? It held once, retest here, springboard, held here, went all the way back up to 110.40, held here twice. All right, this is 108.80, and now we are attempting below. I think a lot of it has to do with the RBNZ expectations. RBNZ has the potential to rise or hike their rates by 75 BPs. We've also seen it in the Kiwi dollar yesterday. At one stage when the dollar was recovering against everything, we went back to retest the 60/60s, which held again. And this morning we opened a lot higher through this 61 and 55.60 again. And the small little, call it a flag, call it whatever you like, but it's trying to break here 61.75. We are trading above 61.80 right now, but we're still around there. But have a look at this for the close of the week or this afternoon. If OPEC doesn't affect commodities and risk too much, why not see a little push up in the 62s ahead of the RBNZ, which is on the 23rd. All right, and yeah, yesterday there was something interesting going on in the dollar NOKI. We had this break below channels up and down, recovered it, went back above, and now we are turning around this more medium-term channel. So I think this one is going to be interesting to keep an eye on to start the week next. I'm not inclined to do anything with the Norwegian kroner right here and now. But it is possible that there's a bit going on for the start of next week. So you watch 10 down to 10 the figure. That's where it's going to happen. Those things tend to move quite a bit, so a 1% range is not too much to monitor. So watch that for the start of next week. Dollar CNH. It identified this 10.17 yesterday in the room. We went a bit above. Ryan and myself both took profit in front of this, and quite happy to have done so. We're back at 7.12. I was thinking of buying it again around 7.12, but then I'm holding back ahead of the weekend. I'm just going to have sit back and wait wait for the reopen of next week. 7.10, 7.07. 704, 702, whatever. There's enough support coming in there, or unless China goes all on the reopening, because that's the other thought I have. This could have been a rebound, and it could be enough right now if China really decides to reopen despite the COVID cases. It could be enough for now. So we have to pay to respect this zone, in my opinion, around the 717. EURMX, no intentions whatsoever. It could be really good tops that we are forming here, but my issue is that we're always coming back to them, and so for the time being, observing and just watching the show, having a beer, and that's enough for me, Ryan.
Well, while you're on that, mate, I've just I was looking at EURMX. I've been keeping an eye on it since you've been pointing out the highs up here. I've just stuck a buy stop in, small buy stop, 22.50, just if we get a break up, because we are keep coming back to this zone. We're getting higher lows. So yeah, I'm just keeping a close eye on that. Maybe a little play on a break.
And this one, right?
Yeah.
Somewhere.
You know me, I don't like a price knocking on the door too often.
That's
so
if you look at that,
see what happens.
Yeah, that would be around 2008, something like that today.
Yeah,
which would put us through this morning's and the night lows. So if that could be used as a stop if ever you get done. But there's traffic waiting above, right? As you know, 2026, and then the big one here around 2040 still. There's traffic waiting above. Yeah, it could be made on a Friday. Anything is possible. You could push up to 2040. Why not? And
Yeah,
I really don't know. Keeping out of it.
we shall see. We shall see.
Yeah, back to you, mate.
Thank you very much, mate. I've not got much else to add. As I say, you know, it's a bit of chart watching positions. Gold is one, still long. Bit of a similar picture to what happened in the Aussie dollar, where we've got this, you know, this lower zone you want to watch to see if it's support, whereas the Aussie dollar broke it marginally. Gold is holding it. So from the price action perspective, it keeps this whole rally in play while we hold this area. But what it also does do is it means if we don't get a push up towards the highs again, it's likely that we test this and potentially break it, which would lead to a further setback, if you like, in this rally. Then we see what happens down at the next zone around the 1730s, 20s, that sort of area. So it's a case of just managing sometimes. You know, you can't trade everything all the time. If you're in a position, it's about what the position does and how you manage it thereafter. So that's what I'm looking for in gold, at least. And on that note, we shall call it a day for the weekend. Do have a virtual pint on us. Thank you for coming to the Flow Show as always. Thank you to Stel and Cayman for their invaluable input, and for the viewers, invaluable input as well during the week. Please have a safe and prosperous Friday. Remember, Friday's pips are beer pips. Have a great weekend, everyone. See you bright and breezy for the football on Monday.
Thank you, Ryan. Thank you, everybody, for being here.
Thanks all.
Guys. Have a safe weekend.
Bye-bye.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.